I think we're heading for a reckoning. I think when your GDP is growing, inflation's a funny thing. So there's so many metrics. The CPI, of course, is garbage. The truflation, which a lot of people turn to, I actually think is just an attempt to monetize the CPI. So someone said, let's just imitate the CPI and pretend like it's independent of the CPI and then charge people money, right? Somehow. And then you end up with Chapwood Index and shadow stats. And I think those guys might be overestimating it a little bit. I'm not positive. Their system might be a little too simple. But if I were to ask you sort of what's the inflation rate relative to the CPI, what do you think the real rate's been over the last, say, 20 years? And most people would say, I don't know, 3 or 4% higher, right? And that means, therefore, there's an interesting ramification. To the extent that over that period, GDP grew around 2.5%, it means that we've been in a recession for 20 years. And you say, well, that can't be. That's bullshit. No, just ask the British Empire. They were in a recession for about a century. So no, I don't think inflation's under control. And I also don't think the Fed controls it. So I've decided that they've been twirling knobs and it has had the appearance of them controlling it. But I think that's a mirage. I also don't agree with inflation's monetary. I think inflation is government spending. To the extent that monetary policy and stuff and money supply responds to that, but I think they got the causality backwards. I think if you cut government in half, you'd cut the inflationary pressures way back. I don't think they will do anything that risks a bank run. Some of the theories about the Silicon Valley bailouts, the big regional bank bailouts, some of the theories were that it was actually an intentional takedown. And as to who was the target, good question. But I do recall when Jamie Dimon was out there saying, by the way, your money would be safe at JP Morgan. And that struck me as about as irresponsible as you could be, unless your goal was to take out the big regional bank. I have a feeling this is a hostile takeover of the regional banks. I do not believe they will let something that looks like the beginnings of a run on a bank continue. There's a famous story. There was a bus stop in front of a bank and the bus was late and the crowd developed and people thought there was a run on the bank and there was a run on the bank because the bus was late. I think they're all hot air on that stuff. I think it's designed to make it seem, and here's where it won't be hot air. If you're in Europe, they'll let Greece go to hell in a handbasket because they can just throw them under the bus completely. I don't think in the United States they'll do that willingly. Now, do the central banks have the power at this point? So I think the tricks that worked up until now might fail. In 0809, what are the estimates? $27 trillion to get the system on full life support. Inflation was here, we know it, but it wasn't headline. And as a consequence, they got away with that. Inflation is now headline. I think that the next time they need to do that, the second it starts to show up, I think all of a sudden the inflation numbers could show up, or gold could start running like crazy, and you're going to start hearing alarms. And all of a sudden they're going to go, we can't do this. And I don't know what happens then. There was some woman on the internet, and she dug into the private equity game. Now, I've read Josh Rosser's and Gretchen Morgensen's book, The Plunderers. And here's what I'll say. As long as it is profitable to take over a company, destroy it, sell the shell of a company, and make money, monetary policy is too loose. If that's a profitable business, the central bank is screwed up. It means there's too much money sloshing around. But I don't know what'll happen when inflation all of a sudden hits hard and the central banks are going to say, look, we got to deal with a run and a runaway inflation. And that's relatively new to the modern era. And I think that's the rock and a hard place for them going forward. I think the Bitcoin being there is because Trump's been talking about it. So I think they're just catching the current, headlines, which we're seeing. I have not been a Bitcoin basher. I walked from it at $10. And in theory, that shouldn't make you not buy it now. But in practice, there's a serious psychological problem saying, look, it's now 90,000, now I'll buy it, right? But that's not my problem. So my concerns with Bitcoin in a nutshell, it started with free NSA guys, right away, red flag. If I were going to bring in CBDCs, which I don't think we have to talk about, that's authoritarianism, right? If I was going to bring in a CBDC, one approach would be to say, look, let's release a digital currency. Let's get the smartest guys in the world, debunk it, deconvolute it, invent all sorts of networks, debug it, compile it, and get everyone used to it. And then step in and say, okay, now you've had your fun. It's over for you. We're taking it from here, right? The Europeans are talking about that already, as is Trump for that matter, in a much more passive way. So I'd worry about that. Bitcoin has also never been through a crisis. They have been through their own micro crisis, right? Bitcoin goes down 80%. To them, it's a crisis. The rest of the world's not in a crisis. The last time we went through a real global liquidity crisis, which I think we're going to get more of because we always do, it will be fascinating to watch Bitcoin. And hopefully it won't be Schadenfreude. I support the Bitcoiners. On the other hand, it's conceivable they're cannibalizing gold's profits, but I don't care. And by the way, my cost basis of gold starts. I was buying gold when it was $270, but I was buying it in Central Fund of Canada, which was at about 25% below NAV. So I was getting gold at about $200 an ounce. And then I bought a wad up through about $450, and then I bought a wad at $1,200 in the middle of the teens. And so my gold cost basis is great. It goes up and down. I don't care because I say, look, I'm up tenfold. I don't need it. So I don't need Bitcoin. The only thing I can't afford is to make a big mistake. So they haven't been through a crisis, and we don't know when the selling gets really savage. And I think the guys who say, if the internet goes down, what are you going to do? It's like, we're all screwed if the internet goes down. So what are we all going to do? You're going to be buying guns and food with your gold at that point. So I worry for them that normalization is not good. The purists like Bitcoin because it's revolutionary and autonomous of government stuff. I go, well, what I'm seeing doesn't look that autonomous, right? I'm not sure pure hodlers should necessarily like the fact that it's now normalized, because as soon as they normalize, it's going to be like Goldman Sachs selling carbon credits and stuff. Now, Bitcoin, I think in some sense has done some damage to the risk asset markets. And the damage that it's done is it has shown fantastic gains that might be sustainable that have no tie to revenue, no tie to earnings, no tie to cash flow. And as a consequence, it's completely numbed, let's say everyone under 40, to the idea that when you invest in, say, NVIDIA, you're supposed to be investing in their potential profits. It's not an NFT. And if it is an NFT, it's going to go to zero. So in some sense, Bitcoin has created a $3 trillion crypto market that also, by the way, is inflationary because it's $3 trillion of moneyness, to use Doug Nolan's term, that didn't exist before. It came from zero. And the Bitcoiners say, no, it took energy. I go, yeah, fine. Nothing of $3 trillion, right? And so in some sense, you've got $3 trillion worth of people running around saying, I'm now rich and I'm going to buy a yacht and it's basic. And it might be totally prudent behavior, but that money didn't exist a dozen years ago. So it's in that sense inflationary. I don't think there's any way that it will become the currency. And the reason is because if it becomes the currency, then Max and Stacy become the Rothschilds. They're not going to let that happen. I've done a ton of podcasts with them. And I said to Stacy, I'm fairly confident that you are not having trouble paying off your credit card every month at this point, right? But they're not going to do a complete turnover of the power structure of the world to Michael Saylor and Max and Stacy. And so somehow the Bitcoin community, in that sense, it totally challenges the entire global currency system. I'm just confident that you're not going to win going against the globe. So I could imagine a brawl in the future where all these things play out. It's bloody mess. And the Bitcoin hodlers come staggering off the field bloody and gouged and cut up, but alive. That's when I will be interested. Well, I've owned gold and silver for now 25, 26 years. I've seen an awful lot of stories come and go. And so I tend to wait and say, until this one gets real, I'm not going to worry about it. But I must admit, it looks fascinatingly real. When COVID struck, gold quickly piled up in the United States. What caused that? So the question that keeps coming to my mind is the gold flowing from London to the COMEX could actually be an intermediary stage. And the question is, where's it going from the COMEX? It's conceivable that because of just the idiosyncrasies of markets, that it's actually that the COMEX is where it passes through to get to, say, China. It could be just the way contracts are written. That's the easiest way to do it. I mean, this is a wild guess. But what if China or Hong Kong had contracts at the COMEX and then they call for delivery? Well, let's say the reverse for true. Let's say China had contracts with the LBMA and all of a sudden gold started flowing from the COMEX to London. And we'd be going, what's going on there? And it would still be the same story. You can't use something to back it unless you're willing to forfeit that thing. So if I take a loan out on my car to buy a car, the critical backing of the loan is they'll come and take my car. So I think all of this, my hunch would be that somewhere else in the world, they're planning on backing a currency with gold. And that would be the BRICS. So we've demonized Russia with every ounce of our being. And 25 countries just met in Russia to talk about alliances. So my understanding is the BRICS is not about a currency. It's about a complete shift in global alliances. So the BRICS are a bunch of guys saying, we're no longer with the Americans. We're with China. We're with Russia. We're with Saudi Arabia. And that, to me, is a profound moment in history. And the biggest mistake we made, geopolitical mistake, and we've made a bunch, but one of the biggest was weaponizing the dollar. And Putin said it brilliantly. He said, you want to be the reserve currency and you weaponize the dollar. That was stupid. The United States has great resources. Let's start there. And I have to ignore all the pessimism that I have. I don't believe we can get to the promised land from here without going through the valley of death, period. I don't see a way out. Our equity markets are 200% over historical average valuation. That has to be wrung out. And I don't care what Trump does. I'm wildly enthusiastic about what Trump's done. I am concerned about some of the things he's done that I think, oh, wait a minute, there's some shenanigans going on here. I don't trust this at all. I believe that the most we can hope to get out of him is a good start. Now, I don't think that at the end of 2 years, pessimistically, or 4 years optimistically, I don't think he can do the changes that's going to turn us into a new bull market. One of the scariest things is from the last 4 decades, we've had a phenomenal run. And the basis of it is tailwind after tailwind that all work demographic, dropping interest rates. And what it created was asset markets whose valuation, which should just wobble around, not trend. The valuation of an equity market shouldn't trend, because if it gets really high valuation, then its return sucks. So it should just flop around in a channel. For 100 years it did. And then starting in around 1981, the equity market valuations compounded 4% a year. We are not going to do that again. In fact, what we are going to do is we're going to compound negative 4%. And I don't know when and how, and I don't know why, what path. But I've never seen an asset market go from profoundly expensive that didn't find its way back to cheap. So that's the valley of death. We got to ring out 200%. And 200% does not ring out by a single crash. It does not ring out by growth. It rings out by a serious, grinding, painful, secular bear market. But these are short-term indicators. So when I see someone show me a chart that's a year old, even 10 years old, I don't care. I want to see a 100-year chart. And if it's not inflation adjusted, I don't care about it, right? There's just a million things that are a problem. We don't have anyone on Wall Street who knows what it's like to muscle their way through a secular bear market. And for them, it's in the history books and they didn't read them. And so we've got an entire generation running the operation who thinks that everything's an NFT. And so we are going to have to ring that out. And it's going to be repeated beatings, Nikkei style, 67 to 81. If you go from 1929 price, inflation adjusted, we were at the same price. So if you own the top, you might go to your grave up because the path is not known.